Hello friends, this side Rahul Magan here as a Chief Executive Officer of Tulsi Consulting LLP, and this time we are covering a very interesting video on our YouTube channel and about a currency which is spearheading the commodities currencies of the globe, which is shortly known as Aussie dollar or Australian dollar or shortly known as Aussie. They are number one in cricket and they're also number one in foreign exchange when it comes to the volatility. We still for about Aussie dollar, it's still a word in the market that it can even swing by several big figures in a day, provided there is an impact in the commodity market. As you very well understand that Australian dollar, Australia export is predominantly of the commodities like the three top commodities currencies of the world, which is Aussie dollar, which is New Zealand dollar, and which is Canadian dollar. All three are having exporting models, but if we exclude, if we take New Zealand dollar into consideration, they have a perishable model like they have FMCG kind model. Except that Aussie and New Zealand, they both have, I would say they both have the hard commodities based model. Now, if you carefully look at, the exactly what is happening in the Aussie space, it is very interesting, to be very honest. And I don't think that Aussie can exclude themselves from whatever happening around the globe. I think today foreign exchange market is reached to that level when every currency need to participate in that. Whether you appreciate this or don't appreciate this, whether your central bank is a highly participative central bank or your central bank is not a highly participative central bank, but you need to participate in that, and that certainly you need to do. In that regards, one of the important concepts which is carry, that is bringing a lot of volatility in the currencies and especially in the Asia Pacific space. Now take a simple example. If I am an American investor and I know that Federal Reserve is not in a position to increase the rate at least by January, which they are saying that they will think, and as regards the media report is concerned, that Federal Reserve is hugely divided when it comes to the when it comes to the increase in the rates. They are hugely divided. We are not sure whether they would increase the rate. We are not sure whether they would decrease the rate. We are not sure about anything. But certainly, what we are sure about that they are hawkish. They are not dovish. Now, hawkish means they are interested in increasing the rate, but they are not dovish as of now. But this makes no sense practically. Why this makes no sense? Because if you carefully look at that, being hawkish and not able to increase the rates, it gives a negative feedback in the market that you are misguiding the people. And you don't know how the things would be. As simple as that. So what exactly is happening, that carry is making a lot of value for American investor. So if I am an American investor who is earning 0.5%, I love to increase my carry. And now think about an investor who is not earning, who is paying. Tokyo. Investors like Tokyo, your Europe and all, they are not earning, they are paying. I was reading a research report by some international bank, and that suggests that sitting today approximately $13.5 trillion of sovereign issuance. Sovereign issuance means the issuance which are done up by respective governments. These issuance are in the negative interest rate policy, NIRP. You can refer our video on our YouTube channel on NIRP, covering NIRP. I was surprised, and lower down the report there was a very good comment which was mentioned. The comment states that sitting today the Chinese GDP is roughly $13.5 trillion, which effectively means that equivalent to the GDP of the second largest economy of the globe, which is China, you have the negative interest rate issuance across the globe. I found it very, I would say, wrong story of the global economy, because we never studied that there would be a time when rather than earning you would pay. And I was looking at the Bloomberg TV in which it was suggested that if you're really interested in earning money, especially in the negative interest rate territories like Europe, like Tokyo, like Swiss and others, you need to pray that you invested at minus 0.7, like 10 years Japanese bond is trading at minus 0.7, and it would go to minus 1. Because then you feel happy that you are paying 70 cents and somebody is paying $1. So you saved 30 you saved 30 cents. I was really surprised to listen to this video on the Bloomberg TV, but I found it very accurately said, that it was rightly said that of course if I invested minus zero point 0.7, I wish that interest rate will go to minus 1, because this is the only saving for me. Because if I invested at minus 7 and the yield will go to 0, I would be on the other side of the game. I would lose that. So negative interest rate policies are hitting the globe. Now in this negative interest rate policy, don't expect that people who are in Tokyo, who are in Europe, who are in Swiss, they don't know how to invest, or they are not interested in invest, or they don't have the money. Of course, we need to consider this fact very carefully, that money is little bit a concern for Europe. Banks are falling at a very faster pace, and things are little difficult for Europe now, but what it should be, to be very honest, in my view. So what is happening, that carry is a problem for me. So if I am a European investor and I really interested to increase my money, I will surely not invest in Europe. I will look for the option where I have the highest carry. And where I would have the highest carry, the carry can only be possible in the currencies who offer me the higher return. And these are Australian dollar, who is offering 1.5%. You have Indonesia, which is offering approximately 7.2%. You have India, which is also moving towards accommodative monetary policy, to be very honest, and I think they are right now their repo rate is 6.25%. They are continuously decreasing, and if I'm not wrong, or the tone of the central banker is concerned, by December or maybe probably by next year, we would have our repo rate to be decreased by 50 basis point. Although I am very skeptical of the view that how much transmission mechanism we would have of that. Example, if we are decreasing the repo rate, how much impact we would have on the curves, like interest rate swap curves, overnight index swaps curves and all. We don't know about that, but at the same time we certainly be aware about the fact that majority of the big central banks across the globe, including Reserve Bank of India, they all are moving towards accommodative monetary policy, and which is, to be very honest, not good for the globe. But we are not if these central banks would continue to decrease the interest rate, the interest rate, then I think we would maybe move towards zero interest rate territory soon, like which Mr. Greenspan had projected long ago. And in fact, if you remember, US was almost 0.25% for the longest period of the time, right? And after 2 decades, they have decided to increase the interest rates, right? So specifically, if we talk about Australia, then if you look at the chart, then you will get to know that the Aussie dollar is falling. There is no doubt that Aussie dollar is not falling. And this is not only the carry. This has several other meaning. Like look at here, when Aussie was almost 0.93, which is 2014 March, from where Aussie has consistently fallen. Now why Aussie fallen? Because of the commodity prices. We all know that commodities are facing a big crash. Not a big crash, big crash. I was watching Bloomberg TV and I got to know that Saudi Arabia planning to cut the salaries of not only the government employees but also the private employees, which is extremely sad news. And today morning I got to know that Bloomberg TV was discussing that Saudi Arabia wanted their basically foreign exchange reserves are falling, which is not a good news. And we know that the Saudi is a main producer of the oil in the system. Unfortunately, if such kind of phenomena would continue to happen, then this won't make a lot of sense for the economy, and this would surely bring which will surely bring a signal that commodity markets would fell down further. And that is something which we can see if you look at Aussie, New Zealand dollar and Canadian dollar. We can clearly see that these all three currencies are heading towards downturn. Although Aussie is a direct pair, New Zealand dollar is a direct pair, Canadian dollar is not a direct pair. And one important thing which these currencies need to consider very seriously is the carry phenomenon, and especially Australian dollar. We are thankful to governor that who not reduce the interest rate from 1.5 to 1.25, but if he would have decreased, Philip, If Philip would have decreased the interest rate, then Australian dollar might have gone to the other side of the game. It might have fallen down very drastically. So we sincerely need to see that, and I think carry is something which is playing a key role in the currency market. And let us before winding up, let us give you the RSI, relative strength index. Give you the RSI also. And if you look at the RSI here, you will get to know that it is a buy as of now in Aussie, because commodity markets are picking up and all, and Australian dollar keep the repo rate as 1.5%. So we would like to bring to our notice to all the traders and the bankers that Aussie is currently a buy, and it should be a buy, to be very honest, because commodities are picking up, like Brent oil, which was trading approximately 51 today. I'm not saying that this is a very good news, but at least a good news to those people who saw Brent was trading at 26, 27, at least from where this is a good news, to be very honest. And commodities are picking up, but some little bad news is that China is not very much active in buying the commodity markets, or there are some news or some research in the public domain which suggests that China already hoarded a huge amount of commodity, which really they are not interested in picking up or increase this. So this would take several years for commodities to pick up. Of course, commodities is a super boom cycle, and things are not very far that when the same oil would trade at 120 or the 130, and I would very sure about that, because oil is a commodity which cannot be made in a day. It took years to make. So I may not be distant from that view that the commodities will not act as a super boom this time. But sitting today, all the commodities currency, which is Australian dollar, New Zealand dollar and Canadian dollar, they all getting down, and things are not as good for them. And the fourth commodity currency, which is also a proxy commodity currency, you will get to know, which is Chinese yuan, who already joined the SDR, which is special drawing rights. And I to be very honest, I sincerely see a very good future of the Chinese yuan. They are very much active in their interbank market, which is China interbank fixed income market. They are doing very well, to be very honest. And I might not be surprised that they would overtake US as a reserve currency of the world. And before winding up this video, I would like to stress one more fact, that Australia need to take a call very early. Although I strongly think that they are they are a little late in that. But now they need to take a call, and I think they have all the data with them, to be very honest. The call is whether they would like to go ahead with the Chinese yuan as their partner, which is Aussie to Chinese yuan, which is currently acting as a cross, but should act as a direct pair, or they are still interested to have Aussie dollar. And before taking this decision, one should not forget that next week is very crucial for the foreign exchange market, because next week the US will slowly moving towards technical default. Like if you remember that approximately, I think one and a half year ago, the US was in a technical default when they were not being able to pay the salaries or meet the the expenses of their government. And then what they did, that the Senate in a hurry increased the debt limit to $29 trillion. Now this debt limit is exclusive of the debt seat, the exclusive of the implicit guarantees which governments have. And as per the few research reports in the market, that the US is having implicit guarantees of more than $400 trillion. Which I know people will not acknowledge, but I think that this data is exactly right, that implicit guarantees of the US is very high. So things are not as good as we see, and I think that in the next upcoming time, like Aussie is going up and commodities are slowly picking up, although they are not at that level where they should be, to be very honest. But I think so that the super boom cycle in the commodities will start, and this would take the valuation of the commodities to the higher level. In the meantime, we would continue to see the volatility in the foreign exchange market, and traders and the corporate treasurers are advised to be very careful in that regards. Of course, at the end, we would like to stress the fact that you should equip yourself with all kind of derivative instruments, because I think things are gone now when you can have only one kind of derivative instruments and you can do everything. To be very honest, you need to have certain kind of derivative instrument which you need to do. You need to have multiple derivative instruments in that regards. And this is something for the today, and I think people who are trading in Aussie, including us, we should have a buy call, and I think 0.75 is the right figure. 0.75 per dollar is the right figure of the buy, and from 0.75 to I think 0.77 or 78, which is two big figures, we can have a buy call in Aussie, and from where we need to take a call whether it would sustain at 0.78 or not, because of course we should not forget that commodity markets are also facing different news every day. Like Saudi is an issue nowadays, to be honest. This is something we need to take into consideration, and you just need to be very active in the financial markets regarding whatever is happening, because things are moving a little fast than expected. I hope you like this video, and this video serves you very well. We are coming up with several videos, and we will bring to your notice that our website is also on the way. Maybe probably by next week we are launching our website. The first look of our website has already been in the public domain, so you can have a look at our website. In case you have any constructive opinion, you can let us know. We will surely incorporate that. We thank you very much for your contribution in Treasury Consulting LLP, because we are almost moving towards 200 videos, and with this we are expecting to cross more than 180 videos this week, and probably by end of October we would be at 200 videos. We thank you very much for your time watching our video, and you know our contact details, which is rahulmagan8@gmail.com, and other ID is Treasury Consulting LLP@gmail.com, and our mobile number is 9899242978. We thank you for that, and have a great day ahead. See you soon. This is Rahul from Treasury Consulting.